All right, what's up, guys? Today we have something to talk about, and it's actually two articles I want to reference from Bloomberg. Now, Bitcoin doesn't always get the fairest, the most objective criticisms in financial media. Either CNBC is bashing it, or they're telling you to buy Ripple at $3, literally at the top. But Bloomberg's articles that came out today are actually pretty good, and it's not just because it was positive for Bitcoin. I want to highlight two things. They talked about Bitcoin's BART patterns. If you trade Bitcoin, you're probably familiar. And I'm also going to talk about why they think Bitcoin could reach all-time high this year. I'm not going to say that Bitcoin has to reach all-time high this year, but the reason I'm highlighting those two is because they actually had good points, and they're starting to understand that objectively, Bitcoin is maturing as an asset. So stick around. I think you guys are going to enjoy this one, and I'll see you in 5 seconds.
I have a wonderful electronic invention I want you to see. It looks something like this.
All right, so check this out. The first article we're going to talk about is the BART pattern. And Bloomberg put this out and said some investors are scratching their head for why this happens. If you're a Bitcoin trader, you've probably seen it before. Maybe you don't understand why it happens. And if you're a holder, I'm going to talk about why it's actually important for you too. So stick around. I'm going to save the 20K price call for the second half. These videos are only 5 or 10 minutes. I make them every single day. Subscribe because I don't want you to miss them. And since they're only 5 or 10 minutes, I really think you should stick around. Anyways, let's hit that BART pattern first. So Bitcoin's unique in this regard. You just don't see this on any other asset on a high time frame basis and with the size and quickness of the moves that Bitcoin does this BART. Sure, stocks can pump and they can retrace that move. You can see it in FX, maybe there's a pop in price and then it retraces that move. But Bitcoin's unique in the sense of how quick and also how large these BART patterns can be. Just in the past week, Bitcoin rose above 10K, it trades almost flat, and then it retraces that move almost in a replicated dump. Now, I used to wonder, why the hell does this happen? Is it one whale? Is it manipulation? All those things probably have crossed your mind too. So I asked Su Zhu when I was out in Singapore, an investor I look to for information. He's linked down below. It's one of my favorite podcasts I've done in the past year. And he also had the best answer for why this happens. You can think about it as Bitcoin kind of creates a bounty for this BART pattern to exist. So a lot of Bitcoin is traded every single day on BitMEX or on Coinbase, or whatever exchange you like to use. I like to use Bybit. Regardless, a lot of Bitcoin is traded, but relative to how much Bitcoin's out there, it's actually a very small amount of Bitcoin is actually on these exchanges. Most of it's held off the exchanges by holders. I'm going to get to you guys in a second. So with only a little bit of the Bitcoin actually moving the price on these derivative exchanges and 100x leverage being available for a retail dominated market like crypto, when price rised above 10K just in the past couple days, a lot of traders opened up position on that move. You can see this by open interest rising. Open interest being the amount of position or amount of size that's open on a move. When enough traders get off sides like that, or there's a pocket of illiquidity after a move like that, it's inefficient for a move like that to happen, then there's this bounty that exists. And whether it's one player or 10 players, or maybe it's a ton of really small players, regardless, this bounty exists to liquidate those traders that are now off sides. So if you're wondering, are we just screwed? Do I always have to deal with BARTs? I think BARTs are going to stick around, and Sue also echoes that in the interview. But you can prepare for it. Maybe just don't tack on 20 or 50 or 100x leverage. Bounties will exist. When there's a sharp move up, you don't have to tack on extra size. You have to be extra careful with Bitcoin. I know it's a great risk-adjusted bet, at least I think so, but you have to understand it's still incredibly risky. So BARTs will probably still exist. I think Bloomberg did an okay job covering it. They mentioned that most investors are scratching their heads for why it happens. I think that explanation covers it pretty damn well. If you want to see that interview, the link is right down below. Now let's get to the second half of this. And this is a little bit more exciting for those of you that are holding, or for traders, or for whoever out there is a big believer in Bitcoin. Because if you remember, just a week ago, Goldman Sachs, their presentation was leaked. They had a call about gold and Bitcoin and stocks, just really where they see the market. They release these reports all the time. Sometimes it can be a report on a stock. Sometimes it can be a report on gold. Sometimes it can be a report just on the economy. They included Bitcoin this time, and obviously people got excited. Now, in the presentation, they actually said that Bitcoin, they couldn't recommend it to any of their clients, and they really did not like Bitcoin. They kind of talked it down pretty harshly. Now, I played a weekly poker game. Game's actually tonight. Tune in on my Twitter if you want. But I asked Ari Paul, CIO of Block Tower Capital, and I also asked Charlie Lee and a couple other guys to weigh in. Peter McCormick also weighed in, host of the What Bitcoin Did podcast, what they thought about this. Ari said his analyst and trader sat in on the call, and he also reviewed the docs himself. I looked at them briefly. Basically, Goldman Sachs' talking points for why they thought Bitcoin was bad or a bad investment or didn't make sense or whatever it was are 2016 talking points. They talk about it being a tulip bubble. They talk about it having no traction. They talk about it having no adoption. They basically brushed it off till the end. And I'm not sure if they did that on purpose. I'm not sure if the analysts just ran out of time. But basically, it was rehashing old talking points. I don't think you need to pay that much attention to it. And I'm not just saying that because I disagree with their analysis. I really just don't think they spent much time on it. I mean, that section of their report took up about a minute. I mean, they breezed right through it. They read the talking points as if you were a fifth grader doing your presentation in front of the class. It was incredibly quick. Now, Bloomberg's report. And I'm not saying Bloomberg's report is better or good than Goldman Sachs just because it was positive for Bitcoin. The reason I'm bringing up Bloomberg's report in their article, which said they expect Bitcoin to double to 20K this year, the reason I think this is actually valuable is because they did take into account all the advances that have been made, and not just the positive ones. They looked objectively at what you and I and any normal observer that doesn't come into this with an opinion or with a bias could figure out. This asset class is maturing. There is more adoption. If you look at the hash rate increase, if you look at the amount of wallets, the amount of users that now own Bitcoin, the amount of merchants that accept it, all of these different things as the ecosystem continues to build, they took into account. Goldman Sachs simply did not. And that's fine. They can have a negative report, but I think Bloomberg's reasons for why they like Bitcoin were actually pretty well thought out. I'm going to read those reasons. First off, historic declines in equity markets because of the virus didn't spill over to Bitcoin. A brief dip in the cryptocurrency was promptly rejected. Secondly, the virus is accelerating the shift away from paper currency toward digital. I think that's true. And third, new quantitative easing policies such as central banks around the globe are helping independent stores of value such as gold and Bitcoin. The reason I think this last point is so important is because Goldman Sachs actually acknowledged this as well. They like gold. They like this possibility that if quantitative easing continues, this experiment that's going on with central banks all around the world, if it continues, assets like gold could benefit. They also understand that Bitcoin is in that same bucket as gold. They just didn't add that in their report, and that's fine. They've acknowledged that in the past. So I'm not denouncing Goldman Sachs' report. They're wrong on a lot of things. They're right on a lot of things. Bloomberg could be wrong here. Goldman could be right. Goldman could be wrong. Bloomberg could be right. But in terms of including new information and taking an objective analysis of what is actually happening in the past 2 years, considering progress, I think Bloomberg did a way better job. And I'm not just saying because they said it could go to 20K. I think the price call is the least important thing about their note. Anyways, all those links are right down below. Hope you guys enjoyed the video. Why BART patterns exist, why they're probably still here. As an investor, they don't matter to you as much. Just don't get levered up. If you're a trader, you have to consider them. If you see open interest rising, maybe start to think about that stuff. Or just avoid derivatives completely if you don't understand it. Secondly, I think Bloomberg's report was great. Not because I think they go to 20K, or because I agree with the price call, or because we have to go to 20K, but because at least they acknowledge the maturity and the advancements that are happening with Bitcoin. That's a great sign if we can see financial media start to give this thing a fair shot. Anyways, we all have conviction. It doesn't really matter what Goldman or what Bloomberg has to say, but it is nice that we're starting to get better reporting. That's all I got, guys. One last note I'm going to leave you with. Tom won the giveaway yesterday. I'm going to do a ton more giveaways, but I'm going to save those for later. I don't have anything for you today. I am actually headed to my lake house this weekend, so there will be no video Friday or Monday, but we are back with daily videos on Tuesday, and they're coming at you every single day. I'm not stopping this. Love you guys. Thank you so much for stopping by. Have a good weekend. Stay safe, stay healthy, and I'll see you guys soon.